Hi, everybody. This is Dennis Wilborn, founder of Active Trend Trading. Thank you for taking the time to watch this free video that we do every week. It is a video where we cover the markets. We also have oftentimes have some trades that we might be setting up that you might want to take. But I want to ask you, before you leave the page, as you watch the video, just give us a real quick thumbs up and share the content with somebody else. Leave us a comment. We'd really appreciate that. So aloha, God bless, and mahalo. Hey, good afternoon, everybody. This is Dennis Wilborn with the Active Trend Traders. Welcome to today's session of how to make money trading stocks, options, and ETFs. This is a free service that we provide every Friday. For those interested in, finding a little bit about what's going to go on in the market for the past week and then what we're projecting to go on for the market for the following week. We like to occasionally provide a bonus stock or an ETF that we are currently trading, just in case you might be interested in joining along. And again, there's always an open invitation for everyone who would like to come and become a premium Active Trend Trader member. And we're glad you're here today, so let's get on to the session. Okay, again, this is Dennis Wilborn with the Active Trend Traders. I want to welcome everybody to today's session. It is the, what day is it? It is the 5th of April, 2018. 2019. Where am I at? So 2019, a lot of interesting things going on. This weekend could shape up to be very, very interesting from the aspect of that it is apparently the China trade deal is really, really close, and so there could be news over the weekend that we come in on Monday and the market's up and is heading for new highs, or on the flip side of that, we come in on Monday and there's no trade deal and the market is just, down to the downside. So we'll play it, we'll play it loose. We'll play it, basically lean towards the in cash position because everything is really extended right now. So we don't know really what's going to be taking place. All materials are presented for trading purposes. Only traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is no indication or promise of future performance. Just always remember, your job as a trader is to wait for the best opportunity. With the Active Trend Trader members, what we do is we provide training about how to identify the best trading opportunities with a rules-based mechanical system. And also what we provide is just some top-notch leveraged ETFs. So we have 8 of them that we're working on. So we call it the Super 8 ETF that we like to trade. And then a couple of other strategies where we apply it to option strategies to basically grow a small account into a large account, or just to continue to trade for cash or trade for income with a large account. So our objective for every week is to basically timely actionable intel review at the end of the week, seeking to clarify, simplify market decisions so wealth can be multiplied, your wealth and mine. My question as I go into this weekend, are we seeing a topping pattern in the market, or are we, should we still be trading pullbacks? The answer to that is kind of twofold. Is that yes, we may be seeing some topping action going on, which means the market's going to go into a little bit deeper correction than it has over the past, since especially since the day after Christmas 2018, where we've gone almost straight up in the indexes. However, we do know that keep trading the pullbacks until the pullback stop trading. Now, if we start seeing the pullbacks getting a little bit wonky, another one, what I mean by that is deeper than they are normally, or they're not maintaining symmetry in the pullback, that may be early indication that the market is definitely weakening. So here's where we're sitting as of about 9 o'clock this morning. That's Pacific time out here in Hawaii. We're up about 5% for the year. Indexes up, 13. NASDAQ, both the NASDAQs are up almost 20% for the year. Russell up a real nice 17%. Want to remind everybody that what we're working on, of course, is our strategic compounding. This is a modification to our strategy 2 session that we are doing. What strategy 2 was trying to generate $500 to $1,000 worth of cash flow per week, income per week. What I did was say, you know what, we need to take and apply some of the old school compounding considerations and just make it a strategic compounding account, because if we do that on a weekly basis, everything is set in place with weekly options, provide us an opportunity to basically trade succinctly on a weekly basis, selling premium or buying premium for expected moves, and the volatility of the indexes or the index of the entities that we are trading also provides where they move sometimes $15, $20 per week. It gives us plenty of opportunities to get in and trade for nice little gains on a weekly basis. So our objective, again, I wanted to keep it simple. 5% per week is my objective. And so for going into this new week, my objective is $668 will make 5%. Currently, we're up. This is rolling over some of the anticipated profits from 2 of the positions that we're currently in. But we're up 33% for the year in this particular strategy. And as you can see, if we continue to just hit this 5% per week, 5%, by the end of the quarter, this current quarter, we'll be up to about $24,000. We started the quarter, or started the year with $10,000 in this particular strategy. So I'll let you go ahead and figure out the rest of the compounding tables, because you'll see by the end of the year, even at 5%, the results are really excellent. And so that's what I was talking about, is I want to do strategic compounding looking forward throughout the year, and we basically retread those, or replace those trades about either every week or every 2 to 3 weeks. And so we're starting to get this into a cycle where we're getting 2 to 3 weeks worth of future trades already in place. And when they come in, they're going to be really, it's going to be really, pretty fantastic. So there's what I'm looking for. Couldn't find everybody. So let's take a real look at natural gas. I want to keep an eyeball on natural gas. That's one of the entities we're trading. As you can see, natural gas is getting close to the first part of April, when it typically takes a bid and starts moving higher. The ETF for natural gas is UNG. Secondly, NASDAQ. NASDAQ tends to stay flat seasonality-wise through January, February, March. This year it has been different. The NASDAQ has been basically on one heck of a run, as the other indexes were since the day after Christmas. But we'll keep our eye on this. Oftentimes with these seasonality type of buying opportunities, what you'll see is the buying will still kick in seasonality-wise, regardless of what's transpired up to that point. Now, does it have to absolutely 100% happen? Of course it doesn't. The market's going to do what the market wants to do. And so we'll see, but we will basically see what's going on from there. So I want to, again, welcome everybody. Eric, Steve, Solomon, good to see you guys. Rocco, Larry, Elsie, and Jeffrey. What else we got going on? Gold futures. Gold typically goes into a little bit of a sleeping mode from the March through about the June timeframe, June-July timeframe, and then catches a bid going into August. We'll see if that transpires that way this year. We should be looking at We are now in the April timeframe. Oil, we've basically, I would say oil right now is following the closest of any of the sector or the commodity ETFs to following seasonality. Crude has, kind of fell down at the beginning of the year, but then took off in the February-March timeframe and is continuing to move higher. I'll let you look at and the entities that we're trading on that, if you need is USO for that particular entity. And so what else we got going on? Hey, tomorrow, if you are up nice and early, like 9 o'clock in the morning on the West Coast, 6 o'clock in the morning here in Hawaii, and would like to join me for the monthly Bay Area Moneymakers webinar meeting, you can basically join us. All you do is go to bayareamoneymakers.com, and that'll tell you how to get signed up so that you can attend this session. It's about a 2.5-hour session. I'm going to be talking about mostly getting into a little bit deeper on the concept of time and price resistance and support to help people, and utilizing Fibonacci's to determine what those are. So it's going to be a whole session about Fibonacci's. Again, our premium training we take place on every Wednesday evening, where we've been primarily focusing here lately about just getting orders out and getting them in, and have been very successful in doing that. As I'm going to go over here, and here's the charts I want to share with you today. And we're going to share these really quickly. That, of course, here, I'll throw up the rest of these. This is my son, Brandon, who's come on board with the active trend trading. He's been very, very good in setting up the procedures for the market action points, which is a excellent timing service for the indexes themselves. And of course, here's my lovely bride, Michelle. And we're very happy. We in February, in April, we will have been married 45 years. And so, and hey, we're excited about that. So 45 years, and then Brandon, his lovely wife, Sharon, and our 2 grandkids. This is Alani, that's David. So we're keeping the active trend trading in the family. So let's go here. Yeah, okay. SPY. Let's take a look at what the indexers are telling us right now. As we see, we have pushed on up to, there we go. It looks like we're trying to push on back up to the old highs of last year's. One of the things that's happening is, while the price action is moving on up towards the past highs, notice what's going on over here with TSI. Not moving up as quickly on the weekly chart. Yeah, that is a weekly chart. On the daily chart, again, just continuing to push up. Right now is watch for, it is not in a place to buy. It is not in a place to sell. If you are long anything with the S&P, it's a good time to go ahead and ratchet up your stops. And if prices drop below the weekly low here, that would be a good time to say, hey, I'm going to tighten my stops and take some profits off the table there. Because what could be forming here? Well, one of the things that could be forming, I'll just draw it out here for you really quickly. And it's not a really good one, but it does constitute. You've got a potential head and shoulders type pattern, sloping neckline. Oftentimes these sloping necklines are one of the other things that we have in place. I'll just throw this out here. If price action gets on slightly above last year's high, we would have what we call a megaphone top. A megaphone top is typically often very predictive of a larger correction or that's in store. Is that going to happen? You know, you never know, but we have to be paying attention for that. But anyway, so we may have either a head and shoulders type pattern on spiders on a weekly chart, neckline down here, or we may go on up and hit the higher high. I mean, if it got up here to about the 300 level, that would qualify, and then reverse from that, that would qualify for showing a megaphone top. But at this point, we have nothing that says, hey, sell me on the S&Ps. QQQs for the NASDAQ. Similar type situation, almost all the way back up into its past highs. I've identified these on the chart. There you go. That are identified here. It's hitting right up against it. I mean, it's got some really strong resistance right there at about the 185 level. May roll down and fall from that. Daily chart. Okay, daily chart, what we're looking at is we have a negative divergence on the TSI on the daily chart. However, no selling signals on the daily, on either the daily or the weekly for NASDAQ. As you can see, the Qs, it put in the shooting star 2 weeks ago. This week it is taking out the top high of that shooting star. Hence, that shooting star is a correction. Yeah, that shooting star is no longer a valid reversal signal. So just keep that in mind. But again, we are getting up close to these past highs, and we would anticipate that's where we would run into issues. I did a timing extension on this, and I found that timing-wise, somewhere between the 6th of April through about the 11th of April is where the past moves have said this is where should be timing for, you know, resistance timing for going up any higher. IWM. Okay, IWM. It looks like it may be recovering a little bit from what we had seen earlier. It was still in this downtrend, had not taken out that swing higher right there at 159.50. It may be in the process of moving closer to that. But again, here we want to be paying attention. What's it going to do when it gets to 159.50? Is it going to reverse and fall? Or is it going to spring load through that? If it spring loads through that, then targeting up here at the 170 to, give you some numbers here, 170 to about 173-ish, 173.50-ish would be the next resistance zone where prices could slow down in that area there. So anything to trade here right now, not really. You know, just watch the pullbacks into the 820 moving average combo. Let's see what else we got going on here. Okay. Here's some stocks that I'm watching going into our buddy Netflix. Netflix has earnings coming up on the 16th of April, which is, I think that's Tuesday, week after next, and that's after market closes. I would like to get some kind of a pullback. I mean, it's pulling back into the 8-day moving average. I would like to see it get back even closer to the 20-day moving average. Take a call or even buy the stock at that point and anticipate, you know, 5 to 10% run going into earnings. That's what I'll be looking at with Netflix. Unfortunately, Netflix is showing that it wants to reverse and fall. Will it? Don't know at this particular time, but that's what we're, you know, that's what we're going to be keeping our eyeball on. So that's Netflix is one of the ones I'm watching. Palo Alto Networks is another one that we're watching. So Palo Alto Networks on a weekly chart, bounced off the 8-period moving average, which is approximately the 50. And as we see, it held right there at that resistance support at 234.62. Need to get price action pushing back up above this level. Here was its reaction after earnings. And so we're still in the reaction mode after earnings. If you're looking at, if you want to be trading Palo Alto Networks, look for a pullback down into the, about the 34-day moving average, which is about 237-ish, or breaking out above the 820, above the 242 level. That's where it'd be a good place to, try to, jump in for a trade moving to the upside. What's another couple of them that we're watching? Amazon. I think I'm going to be doing a webinar that I will probably post to the YouTube channel, and also post it online at our regular active trend trading. That's going to basically talk about how to trade these larger stocks like Amazon, like Apple, like Facebook, Netflix, and Google. How to trade these, because they're they're a wonderful gift to us to be able to trade, but you have to have a strategy for how to trade them. And so this is one of the mechanisms by which, and I'll be doing a webinar to show you how to, do that specifically. So as we know, Netflix has earnings. That starts the earnings for the FANG stocks on the 16th of April. Amazon has earnings coming up when? Well, it's not going to tell us. There we go. Okay, 425 after market closes. And so between now and the end of April, we're going to have several of these entities reporting their earnings. And in the past, how we've taken advantage of those is we have jumped on board and taken advantage of pre-earning runs, and typically those have been profitable for our members going forward. So now's a great time to jump on and become a premium member if you want to take advantage of those particular trades. So Amazon also coming up. Needs some kind of a pullback back into the 820 combo. As you can see, it's far extended away from the 20. Negative divergence on a daily basis. So Amazon, not that excited about that at this particular point. What about Google? Okay, Google has done a really nice job of making forming this kind of V-type shape, pulling back, popped up, and as we can see, you can look to trade Google bound. Again, it also has earnings coming up. And when is its earnings? 429 after market closes. So any kind of a pullback into the 8 or the 20 might give you an opportunity to go ahead and get onto a trade on Google to the long side. And what I would do with that is I would basically just sell some kind of I would either buy or sell some kind of a spread that would take advantage of the expected pre-earnings move. So let's see. And last but not least, I'm going to just chat. Well, I've got two more to cover really quick. This is one that we just put an alert out on and was filled. This was for premium members, but we're looking at, again, we want to, you know, and actually, here's what we're looking at happening with Team. Team has earnings coming up on the 17th after market closes. The expectations of a pre-earnings run is that it would kick off these moving averages, jump up and run up at least back up to the 116 level, which is about a 5% gain or higher. And so if somebody was looking to trade this, if you trade it right around this 20-day moving average, it's a great place to, you know, particularly plan a trade. And so I'll just leave that out there. And then, you know, where's the stop? Well, 5% stop is down here below about 105, actually the 50-day moving average. So that would be the stop with an upside potential of about 5 to 7%. You want to close it out, at least part of the position out prior to actual earnings. And another one we get a little breakout on, and this is the oil exploration, which may be reacting positively to what's been going on in the actual oil patch with the prices increasing in crude. So as you can see, it is finally breaking out above this 31.61 level. Now, is this going to be a solid breakout? But it's very, very classical. And when I say classical, what I'm talking about is, there we go, very, very classical in that we had a horizontal consolidation where we come down, hit a low, bounce back up, hit the high, bounce back, hit the low, bounce back up, hit the high. And then what's happened recently? Had a pullback down to about the midsection of the trading range. It stopped, and now all of a sudden we're getting a positive move back to the upside, which could be very good for XOP. XOP on the flip side of this, you know, in October of just this past year was trading up here about the $42 level limit. So what is that from where we're at currently? Let's just run a quick little, that's about a 40% gain, 40% run. And that's just on the non-leveraged. If you're trading the leverage in this particular case, which would be our buddy Gush, again, a breakout from above where it's at currently up to about the $40 limit. On Gush, we're looking at a run of, an estimated run of, well, there, I'll let you read it for yourself, about 250%. So we'll keeping our eye on those two, because I would really like to get into Gush if it in fact is going to spin up to the upside. The other thing that we had going this past week is, for premium members, we did actually have a very profitable trade in DRIP when prices on this was going the other way. But we got out of that for a nice little, almost an 8% gain. And now we're just sitting there waiting for the next opportunity to jump onto a trade. So, okay, that's all the entities I wanted to share with you guys today. That gives you something to look at over the weekend. Again, if you want to jump on the BAM meeting tomorrow, you can join me at, again, it's 9 o'clock Pacific time. And if you go to BayAreaMoneymakers.com, it will walk you through how to pay your dues and so you can attend that particular meeting. So until next time, keep growing the egg, trade wisely, trade profitably. And for premium members, we'll be right back at the top of the hour with the final hour. So from my home to yours, aloha, trade well, and prosper. Have a great weekend. Mahalo, and again, God bless everybody. See y'all.